folks, it's Doc's Market Minute for Tuesday, November 10th. And I'm looking at the spiders here, and what I want to talk about today is one of my favorite trades, which is the calendar spread. So what I had anticipated and forecasted as the daily energy came down to an exhausted level at this point was to set up a sideways trade. So I expected range consolidation at this point. Expected a sideways range for maybe 2 to 3 weeks or so. And with the low implied volatility after this crush from the bottom here, a time spread really is the perfect application for this. Well, it's been a little bit of an adventure since that point because the price ended up going much higher initially than I thought it would, and then it dropped as we expected. It finally did drop from that point. So I've had to make a couple of adjustments. So let me show you where we are with the current calendar spread. Okay, this is what it looks like on my analyzer, and you would probably look at this and say, well, that's great. You're showing a profit. Maybe you can get out of this trade. Well, this was the original anchor trade strike that I had, was the 208. And what I determined was that if the price went up to 211 or dropped to maybe about 205 or so, that I would double the calendar. Well, guess what? It jumped up 30 points or 3 points on the spiders, plus some, and it forced me to add the 214. So what happened is that I doubled the calendar, and what it does is it turns into kind of this circus tent looking type of profit and loss graph. So the price was up here at 211 and everything was looking good. I felt good about that because the overhead resistance here on the spiders is, it would take a break into all-time new highs to hit the 214 adjustment level on this trade. So, of course, it came down to the 208 level, which meant that what I had to do was to close out the upper leg of the calendar and double up on what's left. And so you can see what's left now, which is just back to a single calendar right now. Now, what I have to do is I have to account for that debit. So I have kind of a sophisticated spreadsheet that takes care of all the management for me. And that's really the biggest challenge for this trade, is the accounting for this, to make sure that you're keeping track of all the commissions and the carried debits and everything like that. And it just ends up being one trade here. And so this trade does not have very long to last. It's only got less than 2 weeks left to it, and I would expect either by the end of this week or early, I'd say Monday, Tuesday time frame, I'm going to have my target profit for this trade and be out of it. Now, if by chance the price decides to go bonkers again, either dropping another 35 points or rallying another 30 points from here to this point, I will just close down the trade at that point. We've just had too much volatility to survive with this specific one. Now, I could adjust it again. I just choose not to do that. 2 adjustments is enough for any trade like this. That's it for today's Market Minute. Thanks for listening, folks. We will see you tomorrow.